if there's one thing that you could debunk about, syndication, maybe, a myth or something that you hear once in a while, what do you think that would be?
I would say that
Welcome back, everyone, to the Passive Road to Retirement podcast. Today, I'm joined by Mark Kenney, who is a seasoned real estate investor, coach, two-time best-selling author, and the founder of Think Multifamily. Mark started his apartment career over 20 years ago as a side hustle while working 70 to 80-hour work weeks in the corporate world. He's purchased over 10,000 units in the past few years across 9 states. He's frequently asked to speak at real estate events and has a desire to help others learn how to go bigger with apartment investing. In his first year of coaching, he helped others acquire 2,500 units worth over $180 million. His coaching style is no fluff, and he's very passionate about the results and providing unmatched service. Mark, thanks so much for coming on the show. I'm glad to have you on.
Thanks for having me, Andrew. I appreciate it.
Sure. So for those who are not familiar with you, maybe you could just give us, a brief background on yourself as well. How you got into multifamily?
Yeah, you're looking good, by the way.
So, thank you. You as well. You as well.
Get the beer going, and then you mentioned you dropped a bunch of weight, so that's great. So good to see you.
45 pounds, yeah.
That's incredible, dude. So it didn't happen by accident, right? You had to take some
exactly.
action,
that's right.
But I grew up one of 7 kids. I have an identical twin brother. Grew up in Michigan. I'm in Dallas now. Really didn't have much growing up as far as we had a place to live and food, which is more than a lot of people in the world for sure, but really no extras. Anything extra you wanted, bike, shoes, whatever, you went and bought yourself, pretty early, young age.
Right.
And my brother and I, twin brother and I are like, man, this kind of stinks. So pretty early in our lives, we said, we're going to do something different. We didn't know what it was going to be. We thought we were going to open like a shoe store or something like that because we liked sports and stuff. Mm-hmm. And then when we were in college, seniors, we said, well, we like real estate. We're both kind of analytical, kind of CPA background, things like that. We're like, we can touch it, we can feel it. So we started looking at buying properties when we were like 21 years old, I guess. And we got a property after a number of different tries, if you want to say, and really didn't know what we were doing, but they were smaller. We were buying 2 to 4 units, and then we both started working corporate world as well. We were both CPAs, and then ended up doing IT consulting, IT business, things like that, but continued to buy smaller properties. And then when I had an IT business in 2013, it became one of those issues where, you buy also 70 to 80 hours a week. My wife, I guess, Tamiel kind of chuckles at that. She's like, that was like way under what you used to work, which is probably true. Consistently, probably 90 plus hours a week, but either way, a lot of hours.
Yeah.
And it started causing issues with my wife, Tamiel, because I didn't have time and had projects all over the world. And so she's like, you need to do something different or else, essentially. So we're like, well, you like real estate. That's when we started buying kind of larger properties, 100 plus units. And we were investing passively as well in deals at the time where I was working so much. I'm like, I don't have the bandwidth, which I didn't. To really do much more. So I was investing passively in multifamily real estate as well.
Okay. Wow, that's great. Now, how many did you invest in? A lot of passive deals or just a few?
I invested, before I started syndicating, I'm trying to think, I invested in, I know, at least 2 passive deals, both multifamily.
Yeah. That's usually a good way to get started, is kind of learn, how things work, right? Before you.
Right. And I used my retirement money for it because it was one of those things where I had my own business. I had a SEP IRA. I'm like, what do I do with this? I hated the stock market, used to the roller coaster. And I'm not saying people can't do really well there, but I would get so stressed checking stocks 50 times a day, literally. Mm-hmm. And, you don't make money or lose money unless you sell, but it still had a big impact on me stress wise. So I'm like, I like real estate. I was already buying it anyways. So I was able to buy larger properties through a syndication.
Yeah. Yep, absolutely. Now you've done obviously a lot of deals, 10,000.
60, I guess over 60 deals.
Wow. That's incredible. So now everyone usually has one deal that doesn't go, how they thought, or maybe a bad deal. Maybe you could just kind of, explain, if you've had something like that happen and kind of what you learned from it.
I have, unfortunately. It's really the only deal we had this type of issue with. But essentially, I had a partner that I had already bought 2 deals with, and they were doing fine. He was a general partner along with me, and then he was a property manager, and then he owned another property already. I was not involved in that, and one of his partners wanted to get out of the deal, so I syndicated the deal, got his partner out. Come to find out that the CapEx wasn't going the way it should go. We believed there was money stolen. Believed there was collusion with vendors about work that was done that wasn't really done. But 2 months after I got involved in the deal, we did remove him, my partner, as a property manager, and also reduce his equity down and things like that. Fortunately, we had a board of directors, which allowed us to do that.
That was good.
It was. So it was 4 other people voting against him. And then once he was gone, almost immediately after he was gone, I stepped into his role, if you want to say, and we started getting liens filed on the property, like a lot of them. And we had one vendor in particular that had, I believe, over 1,000 invoices they sent us.
What?
That were never recorded on the books. So not on the books. People are like, well, how did you not know that? Well, it wasn't recorded on the books. And if someone's in collusion saying, and these were from 10, 11, 12 months before I even got involved in the property at all. But my invoice might be for $300 and says they painted the interior. How can I possibly come back and combat that? I can't.
Yeah.
We hired a forensic accountant, did all these things, stress, got litigation, suing the partner. Yeah, he sued me personally for reducing his equity down, which is a little bit odd, but went on for over a year and a half. Very, very unfortunately, he passed away during that time, made things even worse. And it just was a complete cluster. And, frankly, it was the most stressful thing I've ever done, ever related to business endeavor. 2 main lessons in my mind I learned from that, maybe 3, I guess, but 2 main ones would be, I don't really want to have a partner that's also the property manager. So I don't want a general partner. I just don't. Now, people can argue, hey, they have the best relationship that way, but I don't like it.
Yeah.
The other one is we bought his LLC. We didn't buy it. We came into his existing LLC, which means any of those liabilities I mentioned that were from up to a year before I got involved, it didn't matter whether I was involved or not a year ago. They were tied to the LLC that he already had established for the property. So yeah, I would say always, always, always get a new LLC. I know people do this on a regular basis. They do it for tax purposes, typically, so property taxes don't go up. And you could do it probably 100 times and have no issues. I did it once and had an issue and never do it again. Yeah. So those are probably the 2 main ones. And the third one, which is, really the communicating, I guess, with the investors. And it was, many of them were very understanding. And we had a couple, you can imagine, right? I mean, people in that situation. But I would say this, not a single investor could say that I didn't do, that I did anything wrong. If you want to say integrity, character-wise, I also had to put, over $400,000 of my money into it to kind of keep operations, and then, can't disclose all the other stuff. But when we end up settling in mediation, things like that, I mean, I wanted to throw up in the, I wanted to go away. It's like it's a business decision. I need this to go away. It's a distraction. And it's never going to go away. We can never prove some of this stuff because it happened so long ago, and we just can't prove it. So that was my worst hope, thankfully, and hopefully never anything worse than that happened in my lifetime again. Yeah. But that was my worst experience, and those are lessons learned.
Well, that's quite an experience. So
it is like a movie. And, it got even worse. Like the vendor is part of the Korean mafia. And I'm not joking about that. And I'm not, this is like, you can't make this stuff up. Yeah. But it just kind of got worse and worse as time went on.
Wow. And now you use all third-party management, right?
We do.
Yeah. Much less headaches, I'm sure.
It is. I mean, you have your own little issues here and there, but I just didn't like the idea looking back at it that, we tried to remove him and he didn't want to be removed. Right. And we tried to reduce his equity down because in our mind, he stole money. Right. That would have been a lot easier if the property manager was not part of the general partnership team.
Yeah, that's true. Yeah. Ooh, man, interesting.
Yes.
No, What are you most excited about right now? There's a lot going on in multifamily, a lot of deals coming through. You're closing a lot of deals. What's most exciting to you right now? And if anything, what keeps you up at night?
Yeah, it's most exciting to me. So we are doing, it's so very active. Actually, I have a closing today, which is good. It's the largest close. Yeah, thanks. It's the largest closing we've ever done. So
wow,
it's a huge deal. The most exciting thing for me really is when that person gets their first deal. You've done a lot of deals already, you yourself, right, Andrew, on your own, but a lot of people have not.
Yeah.
So for me to close a deal, yeah, it's great. It really is. But when I see someone new come in, and we've seen examples of people come in and like literally, within a couple of years or whatever, young people too, like mid-20s and stuff. So there's a webinar tonight with a guy doing his third deal. He's 25 years old or 26 now, I guess.
That's in Alabama, I believe, right?
What's that?
The one in Alabama, right?
Exactly. Yeah. And exactly. And he, some of these guys are able to quit their jobs, right? Yeah. It doesn't happen overnight, but to see that, get their first deal and kind of get the excitement and then be able to get in a position where they can kind of live life, if you want to say on their own terms. It's not typically like where they're going to sit on the beach for the rest of their life. There's still work involved. There is. And then as far as, keep me up at night, fortunately, I've been through a lot. People are like, how are you so calm all the time? How do you not get, whatever? And well, I'm like, unfortunately, I've been through a lot. I mentioned that story, but when I have my IT business, people don't understand sometimes what people go through, and it's fine. Yeah, hopefully you don't have to. But when you're working literally, 90 plus hours a week, and you have projects that are a year long, you have to get done in 6 months, and you have projects all over the world, and you have people calling you. Literally, I have people in India and Australia and Switzerland and all of the US calling you literally 24 hours a day.
Mm-hmm.
It's that kept me up at night. Even though I always slept 3 hours a night, but it kept me up. But now my biggest thing is really, I lived that experience with my old partner, and anything like that happening again is probably what keeps me up at night. If that was ever to happen again in any form or fashion, I will say that I do think, we're probably able to identify problems faster than we ever have been able before, doing a lot of transactions. We're able to fix problems faster than we ever before. But it doesn't mean things can't happen. People are people. And, people at major corporations get away with, theft and things like that for some period of time, maybe forever.
Oh, yeah.
So,
in the news all the time.
Exactly. Yeah. And, people are like, how can that happen? Multi-billion-dollar company. But I will say that that's the one thing is that, a project that doesn't go successful is probably keeps me up the most at night.
Yeah. No, that makes sense. And I saw on ThinkMultifamily.com too, the FSG group, the Family Syndication group, in the last 12 months has closed over 250 million and 4,300 units. So that's incredible.
Yeah, we've been busy, and that 12. So we wondered what was going to happen in 2021.
Right.
That's probably through December of 2020, my guess.
Okay.
That stat. Well, we did 6 or 7 deals, depending on how you count. We had a portfolio deal in the first quarter, and we're going to have about the same this quarter. So within the first half a year, we'll be over 50 million in equity, just equity alone. Wow. And we'll be, likely over a dozen deals closed. So it's a lot. It doesn't happen without people taking major action. Fortunately, we have some good broker relationships. We're in a number of markets now. Times are tough for sure. We're not always the highest bidder. So I would say, 20% of the deals we get are deals that we lost originally. And then the first buyer couldn't perform. They come back to us and things like that. But, you're not getting steal of a deal out there typically right now, but you have to be very, very careful on your underwriting and things like that.
Yeah.
Which we've still been able to do. In some cases, the returns are a little bit lower and investors are okay with that. And we've literally been funding deals faster than we've ever funded deals ever. I mean, like very, very quickly, like crazy. I think it's just money running to multifamily because it has fared really well during COVID.
Yeah.
Compared to a lot of other investments, and people are, looking for alternate investments.
Yeah, very low delinquency rate on multifamily versus like a retail or a hotel.
Hotel.
Yeah,
Exactly.
I mean they're getting crushed right now. So
Right.
now you mentioned the underwriting. Now you've got the quick and dirty analysis, the property tour, and the smart apartment analyzer. Maybe you could kind of explain how you came up with those and how people can kind of best utilize those.
Yeah. So the quick and dirty really was something we developed because at the time when I first started out, I was getting tons and tons of deals. And at first you're just getting a bunch of emails from brokers and you don't know what a deal is or isn't yet, right? Because now we typically have brokers reach out to us and say, hey, this is a deal you look at, which allows us to have a lot higher success rate, which is great. But before it was like
as well.
exactly. Before you're getting like all these deals and I'm doing like a very detailed analysis on them, and you get where you can do it pretty quick, but it still takes a lot of time. So I said, let's have kind of a quick analysis we can do. And really it's just for a gut check to say, okay, if they're asking 10 million and I'm coming in at 7 million on my quick and dirty analysis, probably not going to work. Right.
Right. Yeah.
But if I'm maybe 90% of asking price thereabouts somewhere, and they say, okay, let's look at it further. But within that app too, we have the property tour. And that was really where I was doing a lot of property tours early on. And Tamiel would go with me and we would leave, and we do sometimes like 3 or 4 in a day. And we would leave and come home. We're like, was that the property that had that? Or was the other property? Like literally, did they have a pool? Did it not have a pool? I mean, literally things like that. You're like, I don't even remember.
Oh yeah.
So
together like crazy.
Yeah. We came up with a little tool where you can run on your phone or computer. It doesn't really matter. But 50 canned questions you can ask on a property tour, and then you can add your own questions and save it as a template and things like that. So just a way to kind of track it that way. The main thing behind it is you have the questions. You can do it on a piece of paper if you want to. That's fine too. But the app lets you take pictures and put notes and things like that. Oh, awesome. And then the smart analyzer is the detail analyzer. And that was developed and took a lot of time, unfortunately, and cost a lot of money to do it. But the main thing was I used different analyzers. I've seen a lot of different analyzers, and I always felt like they were lacking something. Like, hey, they can't phase in revenue over time. They can't phase in, billing back utilities over time. Well, just a lot of things just didn't do.
Yeah.
So we were like, let's do our own. And we know a lot of the other ones out there. I personally think it's the best out there. I really do.
I would agree. Yeah.
It's just one of those things where you're buying a multi-million-dollar deal. And I used to get analyzers sent to me, other analyzers, and literally there were like notes all over the place. There are colored cells saying, oh, I changed this formula. I did this and that. I'm like, you're buying a multi-million-dollar deal. And then what happened? People will copy that as a template, right? And then use it on the next deal and have something that they messed up on, right? Yeah. And I've seen that like way too many times. So we developed it where it does, in our mind, probably does 99% of what we need to do. Probably never going to do 100%, just reality, but does 99% of what we need to do. And it accommodates a lot of different scenarios that the other analyzers don't. And it just gives a little more confidence in our ability, like, hey, yeah, we're underwriting it this way. And then we have like 40 plus, I guess, like checks we do and spits it out on a different tab for you to show you these are potential issues, not necessarily issues, but potential issues for you to look at. And these were all the things as I started learning initially. I'm like, man, I wish it would do this or that. So we said, well, let's just make it do all those things. And that's what we came up with.
Yeah. No, I would agree. I mean, I've seen a lot of analyzers out there, and yours is definitely the most comprehensive that I've seen, and probably one of the easiest to use as well. I mean,
we try to do it where you can do a higher level initially, and then kind of just go in more and more detail that way. One person. Go ahead.
Oh, I was going to say, even the renovations, some of them don't phase them in. It's just month number 1, you accept, the renovations, but yours
which doesn't happen, right? Reality just doesn't happen that way. So that's where a lot of that, you used to always have to guess in other income or rent increases. And what does it look like in year 1 and 2 for increases in revenue? People just guess.
Yeah.
So you don't want to guess when you're buying multi-million-dollar deals.
Yeah, exactly. Yeah. So now you've got a lot of passive income set up now, and our podcast, is based on passive income. A lot of people want to know, like, what would be your top strategy for creating a passive income stream?
Well, for me, I invest in other real estate outside of multifamily as well. I only actively invest in multifamily as far as like a sponsor and general partners and things like that. But I just don't think there's any investment out there that's better than real estate. I just don't.
Yeah.
Has it gone down certain times? It has. It has always gone up at some point in time, higher, no matter what.
Yeah.
Over the history of time, right? So people can argue, oh, it went down a certain time. Well, maybe those cases, you're not necessarily making as much, but you're surviving. Okay, yeah, you want to make more money, but if you can survive those times, they usually don't last that long. But for me, I like the tangible assets I can touch and feel. This makes a lot more sense to me. I like a multifamily for sure. And then I think understanding your investment goals and then being patient. So some people will be like, they think they need to invest in the very first deal they see. And maybe it's a good deal for you. Maybe it is. Versus like saying, okay, we've had people say, hey, I'm getting ready to retire. I want cash flow. And we're doing a deal that's like literally like 0% occupied. Like no joke. We're not going to cash flow for like 18 months on that deal. So, if you're expecting cash flow after, let's say 6 months or so, just not going to be there. So understanding your investor criteria, sticking to that and mixing it up. A 0% occupied building isn't something I want to do every deal either because they are riskier. They just are. But maybe mixing in different types of deals. Maybe some are complete home runs and some are maybe singles and doubles, but being diversified that way. And then, like I said, I just like that you can touch and feel it. And I'm not saying there aren't other good investments out there. There are, but I've always loved real estate. And I think it's been probably one of the best investments, period, you can put your money into.
Oh, I agree. I mean, like you said, the stock market makes you a little nervous. If you have a fire on a property, at least you have insurance. There's
exactly
no insurance on a stock.
I mean, the stock market to me is like some event happens, 5,000 miles away, totally irrelevant to the industry, and the whole stock market drops. I mean, what's going on?
Exactly.
Or someone does a tweet, someone sends a tweet out, right? I mean, the stock market takes a dive. There's no logic in it. People can say, oh, well, I made a lot of money on it, in it. Good for you. But reality is to say there's actually a lot of logic in there, there's not.
No, I totally agree. Real estate's more slow moving, but it's definitely more steady.
That's right.
Now, also, there's some advantages to real estate tax-wise. Depreciation, especially with the new tax law changes. Do you have any comments on that, or maybe kind of explain to people, what they could expect?
I mean, everyone's a little bit different situation. For me, when I did IT business, I paid a lot in taxes. I get to the end of the year. I didn't pay quarterly. I pay at the end of the year. Just when my CPA set it up, and I'd be like, I made how much money? And I owe how much in taxes? Like, where'd all the money go?
Right.
And I mean, it's crazy, right?
Insane.
And
they're only going to go up, unfortunately.
They're only going to go up, right? So we started investing in real estate. We haven't paid any federal income tax for 3 years in a row, and which is great.
It's awesome. Yeah.
From depreciation being allocated. So you have your regular depreciation that most people are aware of. You depreciate the property, and then you have other things like cost segregation and bonus depreciation. And just think of them as ways to accelerate the depreciation into the earlier years. So, people ask for a number, like what percent can I get? It's going to vary significantly. I'll give you some, very broad ranges. But, let's say, for example, you put $100,000 into a deal. Well, typically, you probably expect at least 40% of that being allocated in year one to you. So $40,000 depreciation allocated to you. And some people are like, well, that's really good. Other people are like, well, that's low. Well, yeah, we just closed the deal. We're closing today is 155% year one. Literally 155% year one. You put 100,000 in, get $155,000 in depreciation. Now, each person's tax situation is different when you can use that, when you can't use it, but you don't lose it.
Yeah.
And that one, the extreme I mentioned there, that's more in a private equity situation where private equity companies can't use depreciation. So it gets allocated to limited partners. And so it's a little bit unique. We've done that twice so far like that. Both have been 100+%. So that's really good, right? Especially we've had people really where if you become a real estate professional, and some people can, some people can't, that's where you can really get to where you
Get
literally
off.
pay zero in taxes, right?
Yeah, exactly. Which is the goal, for a lot of people.
Right.
Now, if there's one thing that you could debunk about, syndication, maybe, a myth or something that you hear once in a while, what do you think that would be?
I would say that people probably think it's easier than it is.
Mm-hmm.
I think almost probably without fail, someone that's done a deal would say there's a lot more involved than I thought.
Yeah.
I would say it's not harder. Like some people make it seem like it's so hard, right? I don't think it's hard. I really don't. I think it's just new for people.
Mm-hmm. Right.
I think the number of steps, and even like with a lender, the number of steps you have for a multifamily versus a home residential loan is there. I mean, significantly different. So I would just say that it's not easy, and some people act like it's easy.
Mm-hmm.
But I also would say the reverse. It's not necessarily hard. It's just some of it's taking the action, understanding what you're looking for, and some of it's a little bit luck. Maybe you're the right place, right time. You have to talk to a broker. You're doing a property tour. They have another deal that's going to come on the market. Sure. Things like that. But to say that just anybody can do it, and it's kind of easy and fast, I would say that's not true. We have a very, very high success rate, but it's not 100%. I wish it was, but it's not.
Yeah.
It's I think we had like 87% of people that got in general partnership in 6 months or less, which is super, super high.
Yeah, it is.
Starting, I'm like, hey, I want to be 100%. I've come to the conclusion, you know what? It's never going to be 100%. I wish it was, but it's not.
87% is very high, though, to get a GP position right off the bat.
It is. And it's really more to the culture that people have and the kind of more the family environment, people willing to bring other people on to help them on deals and things like that. But that makes it easier for sure. But there are a lot of steps involved in it. And some of the guys would be like, gurus or whatever, 90 days or less, get your first deal. And we have people, we've literally had people within 2 weeks, I'm not joking, get a deal. Okay, well, that's not the norm.
No.
We have people, 2 months or less get deals. But again, that's not the norm. So if you set these unrealistic expectations, then you get to that point in time and you're not successful yet, then you're like, I'm going to give up. I mean, Tamiel and I almost gave up. We spent a year trying to find our first deal. And there were a lot of reasons. I was really, really busy.
80 hours
we were also,
at least.
and we were looking at other things like maybe buying a franchise, and we were going to do custom home development, subdivision, all these other things we're looking at. So we're distracted.
Yeah.
But I saw other people getting deals and I'm like, it seemed like we should have a deal by now. And we didn't. So we were very, very close to giving up. So if someone told me I should have my deal in 3 months and it took me a year to get it, I'm like, I probably would have given up.
Yeah.
Yeah.
Exactly. Yeah, I think you see that a lot too.
You do. It's just being patient, having the grit. It's like, with you lost 45 pounds, right? If someone says you're going to lose 45 pounds, Andrew, in 2 weeks, and you get to 2 weeks, you only lost 3 pounds, you'd be like,
you want to give up, right?
Might as well just stop.
Yeah.
But you stick with it, right? For several months, like you've been doing, right? 6 months, whatever you've been doing, 45 pounds is incredible, but it didn't just happen, right? You had to take action. And that's where some people, for whatever reason, will never take action, which is unfortunate. But we try to provide an environment people are put in a position where they can participate, in a fractional piece, basically, and get that real life experience.
Yeah. And really, it comes down to your mindset too, which is, kind of what I think you're saying is really you have to keep, just make sure you're really, looking to, I don't know how to describe it, I guess here, but really just, keep positive and pushing forward, make sure that you're not letting negative thoughts come into your mind. Do you have any daily habits that you do to help keep your mindset?
Well, for me, I work out, and that is literally my mental break. So that's kind of how I start the day out. And that's where I might still be on my phone doing certain things, but I'm there mentally working out, and it's some people hate it. I do like it for whatever reason. I think it's because it gives me that mental break.
Yeah.
That's probably my one. And then the other one would be extremely rare, if ever, where if if you send me an email, text, phone, whatever it might be, I always get back with people the same day.
Yeah, you
no
do.
matter what.
Usually
Yeah.
like within a half an hour, it seems.
Yeah.
Like.
I mean, it may be, hey, I'm tied up. I'll get with you, whatever, in an hour it might be. But I don't not respond to people because I know sometimes some things people think are big deals too. And I might look at it and go, that's really minor.
Yeah.
But for someone doing like a first deal or someone just getting started, it is a big deal to them. So I'll make sure no matter what, I'm getting back with people within the same day.
Yeah, no, it's impressive because you've never not got back to me, and you have a lot of people, reaching out to you. So it's, pretty impressive how fast.
I think that's kind of my IT days where I didn't have a choice. It was,
true. Always just
system was going down or whatever it might be. And I used to tell, I'd get called at 4:00 in the morning or whatever and literally be like, hello? Like you wouldn't even know I wasn't sleeping very soundly anyways, but you wouldn't even know I was in bed at all because it was just a normal reaction, unfortunately.
That's funny. Oh my God, I got one more question, then we'll get into our 5 to Thrive section. If you could step into my shoes for the interview here, what question would you ask yourself that I did not ask you?
I would say maybe what has maybe changed over the span of what I've done, I guess, if you want to say. So, and that's gonna vary per person. It's gonna vary probably, life events, your age, and things like that. But if I look at where I am now, and I have a strong desire to help other people become successful, and a strong desire to help people less fortunate, sex traffic industry or the, orphanages and things like that. 20 years ago, I don't know. I would have said, that's a distraction, frankly. I really would have been. I was so busy, right? So I think getting to the point where whatever success looks like to you, it's okay to be financially, that financially part of that for sure. But at some point in time, I think you need to say, okay, what type of, significance am I going to have when I leave? I just had a pretty significant birthday, and then my dad passed away a few months ago too. So I've had a lot of reflection. Yeah, thanks. I mean, it's, it's made me think a lot more. It's been less than 3 months, I guess. And it's made me think a lot more about my life and what, and what I want to be known for. Someone gave an example the other day. They were giving a talk and they asked, what were your grandparents' names? And people, rattle them off. So what were your great grandparents' names? And basically nobody knew.
Yeah, I can't.
And what did they do for a living? Where do they live? Where do they work? Whatever it might be. And they're like, you're going to be forgotten.
Yeah, that's a good point.
And it won't, and pretty quickly forgotten, if you want to say, right?
That's not.
You're only here for a short period of time, right? So I think putting that in perspective, and your goals don't have to be the same as mine, but you do need to try to find some sort of significance in my mind. And hopefully that involves giving back either your time, financially, whatever it might be, to other people less fortunate. But that, like I said, if you would have asked me when I was 20 years old, I would have had a completely different perspective on that.
Yeah. Yeah. I mean, that's one of the Tony Robbins 6 human needs, right? Is giving back. So, and I believe you can see all the charity on your website, right?
Yes. Yeah. Some of these we've been supporting for by 20 years.
Oh, wow.
So,
that's awesome. Now, if people want to reach out to you, what's the best way for them to get a hold of you?
I just email me. It's Mark, MARK, at ThinkMultifamily.com.
Okay. Now, here's our 5 to Thrive section. So it's basically 5 words or phrase. I'm just going to rattle off and just give me the first word or phrase that comes to your mind. But the only thing is you cannot repeat your answer.
Okay. I told you might have to edit this. We'll see.
I know, right? All right, here we go. First one, investing.
Patience.
Freedom.
Time.
That's good. Your first syndication.
Easier than I thought.
Passion.
Fitness.
And Think Multifamily.
Help others.
Love it. Well, Mark, it's been a pleasure having you on the show. Thanks so much for being here, and it was great to see you.
You too, and hopefully you're going to see you here in about a week or so.
Yeah, exactly. Definitely. Yeah, on the beach, be a nice little getaway.
Yeah, sounds good. Thank you, Andrew. I appreciate it.
Yeah, thanks, Mark.